It's time to now talk about some important earnings. IT Bellwether TCS reported its fourth quarter earnings on Friday. The company reported a big beat in margins and clocked in record deal wins. However, missed revenue expectations. Reema is joining us with the key highlights from the fourth quarter numbers and her analysis as well. Good morning, Reema.
Hi, good morning. I think you summarized it beautifully. A modest miss on revenues, a big beat on margins and record high deal wins for the quarter and a very strong finish in for the full year in terms of deal wins too. So top line growth has come in at 1.1% in constant currency terms. Slightly lower than street expectations, but similar to the December quarter. So no material improvement seen in demand. Margins is where the company positively surprised. Margins expanded by 100 basis points to come in at 26% ahead of street expectations, and deal wins at $13.2 billion is a record for the company, and even for the full year, the TCV is up 25%. Headcount, though, has declined for the third consecutive quarter. The company, in its commentary, has said FY25 will be better than FY24. Brokerage verdict then. JP Morgan has upgraded TCS to an overweight, raised the target price to 4,500. They believe TCS will do better than the rest of the large cap IT peers in FY25. Goldman Sachs too has a buy call, and they're saying there is an increasing probability of a double-digit earnings growth in FY25 at the EPS level. UBS, HSBC too are bullish in the stock with a buy rating. Nomura though has a reduced call with the target price down to 3,250. But just one word, bear in mind, on Friday, the stock had already outperformed. It was up 0.5% at a time when the Nifty IT index was down 1%. Back to you.
Okay, all right. So that is the analysis on TCS's numbers. In fact, TCS MD and CEO K. Krithivasan spoke to CNBC Asia on the growth outlook for the company following the fourth quarter earnings. Listen in.
We had a very good last 4 quarters where our order book has been very strong. We in fact booked close to more than $40 billion of order book in the last 1 year. And it's also second thing, we believe that many of the organizations or companies have been deferring the technological upgrades or transformation. Like they carry a tech debt now for quite some time. And so these two factors put together, we believe once there is a certainty in the minds of our customers about the growth in the near term or medium term for them, the tech spend will resume. So our hypothesis based on that assumption that there is enough tech debt and we have won enough orders, so it has to help us our growth in the medium term.
And of course, stay tuned to CNBC-TV18 as we'll be speaking to TCS CEO K. Krithivasan and Chief Operating Officer N.G. Subramaniam at 8:25 later this morning. CFO Samir Seksaria and Chief Human Resources Officer Milind Lakkad will also join in at 8:40 a.m. So stay tuned for that conversation.